Hey traders, Raghee here, and in this free recap video we're going to talk about the importance of anchor charts and specifically how that approach got us short the S&P, NASDAQ, and the Dow, not just this morning shortly after the clearing, but also before the Asian session last night. Now, the pattern I'm going to teach you and show you here today is a repeating pattern. It's something you can recognize, but the anchor charts play an important role. And what are anchor charts? These are time frames that are psychologically popular. They're well followed, and therefore they make a big impact on the way the market perceives the trend and or momentum. So what do I mean by that? Well, first of all, the daily time frame. I think whether or not something is tradable or has a setup, that's not always going to be the daily. But the daily does have the most attention because the time that most people assess whether something is up or down, whether their investments or their portfolio is up or down, is the end of day. Therefore, the daily time frame captures the most attention by way of people assessing whether they're just richer or poorer that day on where that close for the day is. And one of the things that I pointed out in the premium video yesterday was that we put together this tiny little pattern here. It's called a minor high. It's a higher high, which is this level right here. It's a higher high surrounded by two lower highs. So that's the pattern we had right there. It's a really elegant, simple 3-candle pattern. And we had that pattern in the beginning stages of really confirming yesterday. So that minor high alone wasn't the only reason that I was thinking about a short, because I've been thinking about whether or not we might get weak for a number of days. And the problem is, which one of these highs ultimately are we going to see the weakness really start to come in at? And you know, there's a lot of different peaks that could ultimately be where the selling pressure comes in. So we utilize additional tools like a slow stochastic, or yesterday I think I talked about the slow stochastic specifically. And I said, look, we're finally getting above this overbought level. Okay, so I use a 21K 3D setting on this tool. This red line here is the 80 level. This green line here is the 20 level. But again, it's just overbought and oversold. All right, and 80 and 20 are pretty much default settings on any slow stochastic. And I want to use a very long, slow setting because I don't want a twitchy short number. I don't want something really shorter than 21 because what you'll notice is it tends to change very often. I want something that's not going to peak above the 80 level all that often. You'll see how seldom we actually pop above this level. Okay, so I do want something to be a little bit more rarer in its occurrence. So I know I had one of those rarer occurrences here. The setup that I shared in the premium video and the setup that our members took, not just yesterday but this morning, was what's known as an intraday trend reversal, or what I call a wave reversal. And the pattern is very replicable and it's very easy to recognize because the touchstone of the pattern is the color of the candles. So you'll notice we have an uptrend here, and it's very important to emphasize that before I take a trend reversal, I really want a good quality trend preceding it. So the green candles, and this is a free indicator, by the way. It's called the grab indicator. It's a free tool. It's available on Thinkscript. It's available on TradeStation. In fact, I think it's like the top 1, 2, or 3 most popular indicator. So it's a free indicator. It's available on TradingView. So we go green, and then it shifts to that blue neutral right here. So we know that the bullish momentum is starting to subside. And then finally, we get the red. So as I mentioned, into the Asian session, we were already looking to get short the S&P. Similar things were happening in the Dow and in the NASDAQ. And so we inherited an overbought daily. That's anchor chart number 1. We inherited a 60-minute kind of intraday trend reversal, what I call a rollover. We rolled over, almost like a U kind of pattern on that 60, but specifically identifiable by the colors of the grab. And then this morning, after about 7:30, you could clearly see even the 5-minute was heading lower. So on the intraday time frame, for traders that may not have a risk tolerance that could tolerate, a 1-hour price movement range, we had an elegant little day trade that we set up after the open. So 9:30 bell rings, we wait till 10 o'clock, and this was the zone. In fact, the NASDAQ short was even better. And so we got short on that. And when the anchor charts are saying, yeah, we're going to head lower, and then I've got the grab candles going red on the 60, they were already red on the 5, it's a whole lot easier to pick a direction. And we always look for a bias, a directional bias. And that's exactly what we had today. So if you can follow these anchor charts plus that little pattern I showed you, which by the way, it triggered not as well there. That's not a great example, but you can see what I'm just trying to show you, the switch from green to blue to red. And you'll see these kind of switches quite often. There's a few other tools that we teach in the site to make sure it's a good trend reversal, but that's the kind of stuff we look for. And it worked very well today. We're looking forward to seeing what tomorrow brings. Have a great day.